From the morning reading, bull flags bounce galore. Congratulations to the SPY, Diamonds, Qs, and IWM with short-term new high closes. All 9 sectors moved higher on Tuesday. XLK, XLU, XLV were the strongest sectors, while XLF was the weakest sector. Oil futures fell. Breadth strengthened as advancers led decliners 3.96 to 1 on the New York Stock Exchange and 2.66 to 1 on the Nasdaq. Today, the Spiders, Diamonds, Qs, and IWM each made a new short-term new high close since the February 11th lows. The noise over the past few weeks has been the VIX has an oscillator divergence. The VIX is low and the market is still going to roll over. Once again, people stop looking at what the trend is and start thinking too much listening to others, and too much thinking. One can finally see the future creates both external and internal noise, which leads to blind spots and regularly causes traders to miss what is really happening in the market. Stay focused on the charts and what price action is actually telling you. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:55 a.m. Central Time, and I'm recording this in preparation for the market day of March the 30th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and dive into the morning report. And we've had a fairly interesting morning report with action on the S&P futures at the time of this cut up about 12 points after a very bullish day yesterday. That works out to about a 0.6% change. The Russell futures are up over 0.5% as well. Nasdaq are up for about 0.75%, and Dow futures are up about 0.6%. Crude oil up big, up 1.57%. Euro up about 0.33%, bonds down about 0.2%, and gold is right at scratch. This is facilitated by some pretty strong action overseas, with 4 of our 5 tracked countries doing quite well. China up 2.77%, Hong Kong up over 2% as well. The lone one going south is Japan, down 1.3%. Germany up strong, 1.7%. United Kingdom up strong as well, 1.74%. In terms of U.S. macroeconomic reports for today, we have the ADP non-farm employment change. That's kind of the predecessor view of what to look for with the monthly report. And then we also have the usual Wednesday crude oil inventory report. Looking forward, we have unemployment claims, the weekly version, Chicago PMI, nat gas storage, FOMC member Dudley speaking after the market closes tomorrow. In terms of market conditions, look at this again. Once again, the short-term VIX down here in the 12 handle, 12.17. Skew has been going higher each the last couple days, so note this is now up over the 130 threshold, so that's definitely entering warning category. Though on other aspects, we've got IV percentiles continue to be exceptionally low across all 4 indices, a 12 on the S&P, the 15 on the Russell, 13 on the Nasdaq, and 7 on the Dow. Note that we had standard deviation moves put in on 3 of the 4 indices yesterday, breaking the trend of no standard deviation moves in the last 2 trading weeks on the S&P. We had a 1 standard deviation up move on the S&P yesterday. The Russell came in with a 2 standard deviation move, and then also the Nasdaq had a 1 standard deviation move. The only index that did not have a standard deviation move yesterday was the Dow, and of course it is the most defensive, and with a big bull move, we likely saw much more action going towards the higher beta versus the lower beta, higher dividend paying kind of stocks you typically have in the Dow. So that makes perfect sense there. Let's go ahead and go to the charts. And here's the SPX, and you see just how big an action that was yesterday. And while super big, super bullish, note that we didn't actually close outside of the recent swing high. So this is important, but we're still looking for carry through. So the importance of this is that it looks like it fired off another bull flag, as one of the morning authors mentioned. You know, you had this flag pattern here, 2, 3, 4, 5, 6 bull flag patterns since this February low, every single one of them being a bull continuation pattern and taking you up another leg. Doesn't necessarily mean that you run up a zillion points, but it is a continuation, and we continue to just leg up with these bull flag patterns. Now, so that means that this is a higher low from the prior swing low, from the prior swing low, from the prior swing low. And now we're looking to see a higher high come in to truly establish the intermediate trend is indeed continuing higher. If we look at the S&P futures, you can see we've already done that. So we don't like to put everything into overnight action. Volume is thinner. Not all the market participation not all the market participants are in. But we'd like to see this validated by the action during the cash open. But at the point that we are here with, you know, an hour and a half before the cash open and being up well, I don't see anything at this point that's going to come in between now and the next hour and a half. It's going to take this down and make this not a higher high on the SPX as well. So it would seem that we've got the pattern in. The bull flag has fired, and we're off and running until we get to the next set of resistance and pullback. Now, where might that be? Well, the obvious place is this pattern right here, where you had a dark, well, probably a dark cloud cover, we could call that, where a candlestick reversal pattern signaled that we were going to reverse and come down, and certainly we did come down off that pattern in a big way. So folks who took that signal right there certainly were well rewarded. But in terms of where are we likely to go at this point, well, that's the most likely. In fact, you could even take this action here and basically call this a triple top off these daily candles at the very least. So this 2073 area on the S&P futures chart, on the SPX, let's see what that looks like. Probably the action across these, so you got these two and these two, so pretty much a we'll call that a double top, clustering these together, but probably also around this 2078-ish area. So we probably have a good 20 points or so to be able to run up before we run into significant resistance. And you have to start talking at that point about the all-time highs, which on the SPX are at 2134. We're starting to come within spitting distance of last May's all-time high. So this has been quite a move from the February low, and without really any kind of significant retracement, just small little bull flag patterns that lasted, you know, just a couple, 3 days most of the time. Perhaps this most recent one lasted the longest, where you might say 1, 2, you know, maybe 3 days before the flag really fired. I suppose technically the flag fired on this day here, though it didn't give you a much follow-through, and then more follow-through after Yellen's comments yesterday. Technically, the flag pattern would have been entered on this day, though, and you would have kind of been just kind of sitting there on day one. So let's take a look at the others. The Dow, of course, we mentioned was not as potent yesterday with less than a 1 standard deviation move, and yet at the same time it's clearly a bull flag that has fired off there as well. And Nasdaq, look at the action on the Nasdaq. So it had more ground to make up. It has been weaker lately, being held down by the biotechs, which do comprise a pretty heavy part of the Nasdaq 100. And then the Russell, big move yesterday on the Russell, 2 standard deviation move, cleared the prior highs. So, and basically, very quick 1-2 action. You had a higher low, and now we have a higher high in the Russell. So it has apparently broken out of this consolidation pattern, which we had pretty much drawn a box around. It's pretty much set that up as of now. Again, prior swing highs of importance probably up here at 1160, so there's a good bit of room on the Russell. It could easily run some 50 points before it runs in any kind of horizontal type of resistance. Now we could go back and look, are there some sort of diagonal? We could probably draw something coming through here, and perhaps we come into some diagonal resistance that might be of some importance. Let's go ahead and add that drawing. That might actually be valid. There we go. So let's take a look for this to come in, depending on how fast it gets there. Probably somewhere around 1135 to be pretty important diagonal resistance on the Russell. So that certainly is setting up there. So that's, well, very quickly, let's go ahead and take a look at the volatility. As you would expect, it's coming down, and it's definitely coming down into the bull range. We're now playing in the 15 handle. So volatility is saying, hey, bulls are in control. We have no fear. Gold, pretty messy pattern here of late. And then let's take a look at bonds and see what it might be telling us. Bonds, you know, welcome the Yellen news yesterday. And, you know, we're trading up at the same time the market was trading up. So we sometimes see that, you know, when there's real fear in the market, equities go down and bonds go up. But sometimes when you have interest rate sensitive news like we had yesterday, you get both bonds and the equities going up. So this is not a correlation, inverse correlation that always works that way. Sometimes they both operate on their own, to their own song sheet, and set themselves up and working together, and for their own particular reasons they're working together. But many times, of course, we'll see those in inverse correlation. So enough on the charts right now. Let's go ahead and go to our daily report. And we've had a couple changes here since yesterday on our market trend intermediate term phase opinion. Still phase 4, these price patterns near horizontal resistance. We expect this pattern can last for prolonged periods of time. In terms of our mechanical market timing signals, the first one confirmed uptrend from IBD with an accumulation distribution score of C on the Nasdaq. So that's a slight improvement there, and the S&P at a B-. Also with an improvement is the GMI index, our second mechanical market timing signal. A perfect 6 out of 6 now with a buy signal that has been placed since March the 2nd. In terms of decision point scoreboard, our third mechanical signal, it is no changes since yesterday, actually no changes since March the 18th, but we do have now a nice stack between the short term and intermediate term in agreement, though the very important long term still looming out there is an obstacle to this. So not perfect correlation here with all of our market timing signals. Still have some warnings because of this long term, and you just saw me draw that trend line on the Russell. You know, there's some significant resistance up above this that the bulls are going to have to work their way through and repairing all the damage, but they certainly have done so in the short to intermediate term thus far. So consensus there is market still in something of a transition, but give the edge quite a bit to the bulls at this point until proven otherwise. In terms of position sizing opinions, both systems are coming in at 100%. In terms of intermediate term market posture on the 4 indices, all very, very strong, very strongly bullish with a weak bullish sentiment line supporting them. The strength of the trend is currently weak in that it's below 80, but it is significantly improving. Hedge warning status 0+, so normal with some elevated risk conditions, and we'll talk about those more in a moment. There are some warnings that are starting to accumulate, so we have to be wary of those. In terms of specific strategy opinions, no changes from yesterday. VIX is in the acceptable window to initiate new positions for novice traders. Cover call strategies and put selling strategies conditions are acceptable for new positions. You see these ratios of in the money, out of the money strikes, also of low beta and high beta, you know, getting increasingly bullish, and yet at the same time not just all out bullish. This is not 0 to 3. This is not, you know, 0-1, just high beta kind of stuff, go for it kind of timing. It's a 2 to 3. So there is still some defensiveness being maintained in these opinions. In terms of those special warnings, we still have that volatility ratio warning. It fired again with another close outside the window. So we're looking for a close back inside the window to tell us that this is looking for a reversal. We also have the distribution day count on the Nasdaq still sitting at 5. The skew, we mentioned this earlier, that being up over 130 means that we have about a 10% probability of a 2 standard deviation move in the next 30 days. The other thing that we're looking at is the key intermarket risk aversion indicators, now all 5 flagging as risk off. That's not risk on, that's risk off, off. So that is an early sign that we could be setting up for some reversals. Sentiment is also giving some signs that this could be running to an end, both in the short and medium term, both in warning status now for stocks. In terms of specific ETFs and so forth, we notice the LQD, very, very high sentiment, so look for reversal patterns there to potentially set up as well. Fear and greed index are combination of 7 different fear and greed indicators, now at a 68 on the composite score, so relatively high and a little bit higher than it was yesterday, but not as extreme as it was a week ago. And in terms of intermediate term market postures across various sectors and key ETFs, no change from yesterday, but the primary takeaway from this continues to be that there's a long laundry list at this point of intermediate term market postures being bullish, both in defensive and non-defensive sectors or ETFs. In terms of other sector specific information, the percent change, note that it was green across the board. Everybody was up yesterday. Pretty good day. And then also in terms of the market posture, only energy kind of being a holdout with being a fairly neutral across all 3 time frames. Everybody else is pretty much stacking up with the sea of green and pretty much lining up to be very, very supportive of bullish continuation patterns. So I think that's probably enough with that today. Let's go ahead and start wrapping up. I talked about how to get on the emails recently, and you got that. Obviously, with YouTube, one of the things to keep in mind is that you can subscribe to this YouTube channel. It's free, and that gives you an alert when content has been posted. We also greatly appreciate it when you like us on YouTube, and then the same kind of thing when you retweet us to your Twitter followers, to your StockTwit followers. That's a pat on the back that you find that this is helpful to your trading and your market preparation for each day. So that is very much welcomed here. I'm going to now scroll through. If you see something of interest, just hit the pause button. We're right at our 20-minute mark. Remember, on YouTube, you can hit that gearbox and set up your speed to play back at 1.5 times. When you do that, you'll listen to the 20-minute video in about 13 minutes and still be able to understand everything I say, because you can listen faster than I can talk. Here are the disclaimers. As always, hit the pause button if you need more time to review the disclaimers, and then note at the bottom here the hyperlink that takes you to the full set of disclosures. We'll see you back here tomorrow morning with the Falcon Global Market Preview. Good trading to all.